What's up YouTube, it's Sankey and I make videos on the stock market. Guys, I've got a jam-packed one for you today. I'm covering NIO and the latest updates there and what we should expect going forward. Guys, I'm also covering some of the EV plays that you guys have been asking about over the last couple of days. Now, as we approach the middle of the week mark, it's important that we get our strategy nailed and understand what we should be doing with these plays. So make sure you watch the video all the way through. Now, without further ado, let's jump into the portfolio and see what's going on. On the road to 100k is my YouTube growth portfolio, currently standing just under $45,000. So it's been a good day in the stock market, up about $1,000. Guys, I come on here each and every day to show you guys the portfolio, to share the journey with you. The good days like today and the down days like we've had over the last couple of days. And this is going to help you guys because you guys are going to jump in on the same plays as me and we're going to get your portfolios from your first $1,000 to $2,000, then from 10 to 50 and then eventually from 50 to 100. Guys, the idea is to help you guys create wealth through the stock market. So we're going to kick things off right by starting off with NIO. Now, NIO's been up about 5-6% today, which is fantastic. Now, I know over the last few days, a lot of you have been a bit worried about your NIO position, right? A lot of you have been asking me, is NIO going to rise this week? And you're wondering where its support line is. Is it going to drop into the 30s? But guys, I've shown you the analysis, right? Now, NIO does have a very strong support line at $40. I've shown that to you guys several times and that has just proven true over this week, right? We saw NIO open up on Monday touching that 40 line and it didn't go below it, right? Bounced back and then today up about 5-6%. So that's fantastic. So I hope this is giving you guys confidence in your NIO investment. Guys, you got to remember the stock market moves up and down. But you as an investor, you just have to stay strong and be patient because the good days are coming, right? You're investing in an asset that has phenomenal future growth potential. Right now onto NIO's latest news. So NIO recently announced that they have reached a deal to build 100 EV charging battery swap stations in China. So this is good news. Now, NIO has signed an agreement with State Grid Electric Vehicle Service, which is a subsidiary of a company that is owned by the Chinese government. So this is good news for NIO and should provide a little bit of momentum. Now, what I like about this isn't the fact that they're building 100 charging stations, because this number to me isn't even a massive magnitude, because we already know that NIO is looking to build 300 second generation battery swapping stations next year anyway. But what stands out to me there is the fact that NIO is still maintaining that partnership with the government. Now, we know over the last couple of months that NIO has backing from state-owned organizations, and this just reinforces that, right? So it's also worth noting that State Grid are not just exclusively working with NIO, right? They're also working with NIO's competitors, and one of them is Dongfeng Motor. So this came out a couple of weeks ago. They're working with Dongfeng Motor on pretty much the exact same thing, right? Charging stations and battery swapping stations in China. So the fact that NIO is partnering with State Grid isn't something I think is going to materially move the share price, or I think is astounding news for us investors. But what I like above all is the fact that China are gearing up their infrastructure to accept more electric vehicles and make it much more convenient for consumers to use, right? By partnering with all these different manufacturers, NIO, Dongfeng, they are ensuring that their infrastructure is ready to accept the monumental change to electric vehicles, and this is what I like above everything. So our next EV play is Plug Power. Now, they've had a fantastic day in the stock market. They're up about 10%, right? So this is great share price movement. Now, this is off the back of news that came out saying that Plug Power has extended their hydrogen and fuel cell solutions into Walmart e-commerce applications. Now, Plug Power and Walmart have a long-standing relationship of about 10 years. And Plug Power have actually supplied 9,500 fuel cell powered vehicles used by Walmart at their 37 distribution centers. So it just shows you the magnitude of their partnership. But now they are improving that partnership. They're taking one step further by now helping them with their e-commerce applications. So this is a big move for Plug Power. Why? Because the e-commerce sector is booming and is set to continually grow going forward, right? So this is a lot of revenue potential for Plug Power. Now, I like the fact that they have also shown that Plug Power is in demand, right? There is need for their fuel cell batteries. So this could also help them win new businesses, new business with different customers, right? Large scale customers. We know that Plug Power work with some heavy hitting customers already, like Amazon, but this just opens more doors. And especially I like the e-commerce element to it, because e-commerce is set to soar going forward. And if they're able to secure more clients and help them in that logistics space, this could be really, really good news for Plug Power. Now, I know a lot of you are wondering what to do with Plug Power. Should you buy in at this point? But guys, let me draw your attention to the fact that Plug Power is an extremely expensive asset, right? So just to put this into perspective for you guys, Plug Power has a price to sales ratio of 40 times, right? So take the market cap and divide it by the revenue, right? That is a 40 times price to sales. Price tag right now on Plug Power, its current share price of $28.48. Now, if we compare that to NIO, which currently has a price to sales ratio of about 25 times. So 40 times for Plug Power, 28 times for NIO, 25 times for NIO. So it just shows you the magnitude of how expensive they are right now. So we have to tread very carefully with Plug Power. I know they've had some fantastic news and they do work with some heavy hitting clients, but they're an expensive asset. So guys, as an entry point, we don't want to be buying in unless we see $24, $23, right? Let that cool off. Let the news cool off before buying in. Now, Plug Power could be a fantastic long-term play. They've proven themselves, they have clients, they're winning business, and they're in the right sectors to grow. But let's let that share price cool off, right? So if we see $23, $24, that's a good entry point to buy in, get our position ready, stocked up before the next rise in the share price. So guys, I just want to quickly draw your attention to some of the analyst forecasts. So as we can see, next 12 months, there's a high of 30, a median of 25, and a low of 14. So as you can see, based on what the analysts are saying, there's not much upside here and there's a lot of downside. Now, I do think that share price has the potential to run up higher than $30 over the next 12 months. But the key takeaway here is that there still is downside and that share price could drop pretty significantly. So when it comes to Plug Power, entry point is really, really important. So it's important that we do wait for a dip, a significant dip in that share price before we consider taking up more position in Plug Power. So next up we have QuantumScape. Now again, fantastic share price movement of up 10%. Now this comes off the back of the fact that news came out saying that a trade group which represents major car manufacturers have actually gone to the Biden administration with a proposal to boost EV sales in the United States, right? So you can see how if a proposal like that is actually accepted, then it's going to be easier for QuantumScape to win business, and their share price has popped off the back of that. So alright guys, when it comes to share price movement, there's often two reasons why share price might move. One is that the actual company is doing very, very well. You know, its revenues are good, its margins are good, or there's a speculative bet on the future environment that the company is going to operate in. So, you know, the industry that it's operating in is going to grow for some reasons such as regulation changes or, you know, increase in consumer or customer demand. And that is what we're seeing here. And that makes it a little bit more speculative to hold QuantumScape at this share price that it is currently, right? Because it means it has to sustain the share price. Now, on a valuation perspective, QuantumScape is priced very high. Now, they're a pre-revenue business that has a market cap of $500 million, right? If we do a price to sales ratio on 2025 numbers, this gives them a price tag of 14 times. Now, if we just compare that to someone like a Li Auto, which trades at 20 times 2020 revenue, you can just see that QuantumScape is a very, very pricey asset to hold. So we have to wait for a dip in that price. Now, I'm going to say I'll be comfortable with you guys jumping into QuantumScape when it is below $40. Now, yes, I know this is a big drop off from where it is now currently, but this share price could drop for a number of reasons. It's going to be difficult for them to sustain this valuation for a long period of time until they start making revenue. So there are going to be some major dips in QuantumScape's share price over the coming months. So again, when it comes to QuantumScape, it really is about entry point, right? So you do want to wait for a significant drop in that price because there is most definitely the potential to double up your money in this play. So guys, do wait for that significant drop. It's coming, just be patient. And when it does, you can jump in, get your position and ready for the double up. So if you've been rocking with the channel for a while now, you know what time of the day. It's question of the day time, and this is a good one. It comes from Michael. The question is, what would you say is the best stock for an 18-year-old to buy right now for the long term? So thank you very much for sending in this question. I think it's a really, really good one. And it's going to help a lot of guys out there because I'm all about getting young adults into investing. I think it's one of the best things that you can do, and it really does set you up for a fantastic future. So this actually brings me back to the days when I was 18 years old and I made my first ever investment, and that company that I invested in was Walmart. Now over the years this turned out to be a fantastic investment, and it's grown over 200% since then. So when it comes to stock investing, there's really three buckets that a company can fall into. One is high risk, where a company could be up 20% one day, down 30% the next, up 15%. The second is where a company kind of just trades flat year over year, doesn't really move anywhere, or kind of trends downwards even, but they might pay a high dividend to compensate you for that. And then there are those growth assets that grow between 5 to 10% year over year, and you can count on them doing that for their investors. And a Walmart fits nicely in this bucket. Now, as an 18-year-old, as a young adult, I would focus on this third bucket, right? Those growth assets that are going to grow 5 to 10% year over year. Now, they might grow faster than that. Some years they might grow 15%, 20%, but they're not going to just double up in a year, right? That is not how these plays work. But it's going to be nice for you as a young adult to see your investments grow quarter over quarter, year over year. And I think that's the most sensible thing you can do. Now, added to that, it would be good for you guys also to invest in a company like that pays a dividend, right? So Walmart currently pay about a 1.6% dividend. So they're going to pay you every single quarter based on how many shares that you own. So this is good for you to kind of understand dividend payments as well. And it's nice to not only just receive that dividend, but see your money grow year over year and quarter over quarter in a company like Walmart. Now there's other companies out there that fit into this bucket. Pepsi is a good one as well. Nike is a good one. Starbucks is a good one also. So there's a lot of companies that you can pick that fit into this third bucket, and that is where I would focus my attention as a young 18-year-old, and just build your stake in these companies over time. Just allocate a certain amount of capital each month or each quarter and just drop it into a Walmart, a Nike, a Pepsi, and you'll be surprised how large you can get that investment over time if you do that consistently. So thank you very much for watching today, guys. Do hit a like on the video, it really, really helps the channel out. If you're new, do hit that subscribe button. I post every single day. Got some fantastic plays coming for you. Actually, I've got a penny stock video coming for you tomorrow as well, and I've got some more EV plays I'm going to throw your way. So guys, as I always say, do check into the channel each and every day. The stock market is rapidly moving and you never ever want to miss a beat. So until next time.